Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis, and we just finished one of the most legendary week of trading with SPY giving us this impulsive move to the downside. Question for next week is, are we going to get into more Grinch mode or are we going to get that Santa rally? And we're going to talk about that in today's video, the plan of action, levels and triggers to watch out for, and how we traded yesterday on Friday. Let's go. So here's the 15-minute chart. I know a lot of people, they see a lot of lines and then it confuses them and throws them off. For me, it's very simple. These lines represent my support and resistance levels. Without them, I use them to define my risks, help me with entry and exits, okay? I don't just enter randomly based on my feelings. I wait for the right setups, okay? So I alerted to the group yesterday morning. As always, we identified the first resistance and the first support of the day. I wrote here, 385 is first support. Next resistance is 386.6 to 387 zone, okay? I wrote here at 9:54 a.m., if 385 fails, look for puts, okay? We got here, look, this long wick, nice wick. This orange line was my 386.6 level. It got within a few cents of that level, but we got strong selling pressure, hot stove rejection around that area. Strong selling pressure. If you're wondering what a hot stove rejection is, think about the last time you ever touched a hot stove and how quickly you pulled your hand back. That's what happened when price got to that zone. And right here, it broke down 385.75. That was based on the 50-day moving average, but I alerted the group to take short positions or buy puts when 385 failed. Look, that broke down right here. That's where you want your entry to be. You want to enter as close to the breakdown level as possible. All right, that's what you want to do. That's what I do. All right, and it dropped down as low as 381 on the day. Okay, you know, $4 move. Very nice trade. And then the rest of the day, we got some chopping and some recovery over here where it recaptured a 382 level. It was a bit tricky though, but we recaptured 382 here. The one that I alerted the group at the end of the day, I had to go to the doctors. When I came back, I saw 383.5 cleared. I alerted that to the group with 385 as a target. It went as high as 384.96, but that's how level to level scalping is. It doesn't have to be perfect. But what sucks is that it came 4 cents shy of my target. So I couldn't get a wha-bam moment. All right. But, overall, the trading, in my opinion, was pretty easy. All I did was short at 385 and I just left runners for the rest of the day and let my trailing get stopped, whatever it was. Okay. So now we got to talk about the plan for next week. Okay, you see this, it just goes straight down. Market's not going to go straight down forever. Okay, this looks like an impulsive move to the downside. We could get more downside next week. All right, but we also could get some type of correction wave or a reversal. There's a couple of things I want for you guys to note. All right, here is the seasonality, and also I'm tracking this year's price action with the 2007 to 2008 price action. Okay, so looking at seasonality, it shows here that SPY has a tendency of reaching some type of top and getting some type of choppiness in early to mid-December, and then we're gonna get some type of dip around mid-December, and around after mid-December we should get a Santa Claus rally. Okay, and so far you look at the price action, we did get some type of top with a sharp drop to the downside, so it's tracking based on tendencies. All right. However, you're looking at the 2007 2008 comparison. Like I said, it's not going to track with each other tick for tick. We don't trade these, we track these. Very different, all right? We trade price action, but I do track these to help with my decision making, and I find it interesting. But according to this coming up week, we should start getting some more downside, maybe a dead cat bounce, but we're not going to get a Santa rally. We're going to get in Grinch mode, okay? So these two things that I'm showing you guys, the seasonality in the comparison to the 2007-2008 chart, it's contradicting each other. So in my opinion, next week is going to be a big week. All right, we're going to get our questions answered. Okay, and like I always say, price action is the shepherd. We got to wait. So, but we also important to know the levels, know the setup, so we can trade it unbiasedly, so we know what it looks like. So here's the bull case and here's the bear case. Okay, I'm going to start off with the bull case. please watch the bear case as well after, all right? So big important level that we lost was the 386.66 level, okay? That was the 38.2 fib level that when we got below it, it actually back tested as a resistance, you know, few cents shy, but I will count that as a back test and it stayed, you know, it got the push downwards. So in my opinion, we got the breakdown, a false breakout setup here with the 50-day moving average. Bull case scenario starts by recapturing the 50-day moving average, which is currently at 385.7. And also the 38.2 fib levels at 386.66. So that's a critical resistance zone, all right, from 385.7 to 386.66. That's about a dollar zone. If we can recapture that, I feel more comfortable above 386.66, all right? We recapture that, the bull case starts, and maybe we got resistance at 388ish, but the critical one obviously is at 390. If we recapture 390, that will be a big, massive false breakdown setup. It will be very bullish, and maybe we'll put 392, 393.5 in the critical 395 to 395.7 zone back in play. If we recapture 395.7, that's a recapture of the 23.6 fib level from October low to December high. Okay, that will be very bullish. If we recapture that, put in 398.5, 400, and of course the 200 daily moving average back in play. Okay, so to keep it simple, bull case starts with a recapture of 386.6 and 390. Bear case continues as long as SPY is below the 50 daily moving average. Okay, we did fill a gap here from, if you look at November 9th high, pivot high is around 381ish. We filled that. Okay, so as far as the gap goes, at least we filled it to the wick. All right, so the bear case continues, or the momentum for it continues, if SPY can break down the 381 and 380 zone. 380 is the 38.2 fib level from March 2020 low to January high. So 380, 381 zone, very critical. If we can take that level out, 378.7, 375, 37, pivot low right here around 373.6s, and then I got the 61.8 fib level at 371.9. Okay, so bear case scenario continues as long as SPY is below the 50-day moving average, and it can take out that 380, 381 zone. Maybe it'll attract more sellers, increase some volume, make it stronger, or whatever. Okay, so you guys know the bull case and the bear case scenario now. Okay, SPY is starting to enter oversold territory, so keep that in mind. If you are doing some bearish plays, I would size down. Okay, just because the RSI is oversold, that's not a buy signal. It can become more oversold. Okay, all I'm saying is risk is getting a little higher, and just in case we get some type of corrective rally. I'm just saying, I want to keep us prepared. That's my goal. All right, QQQ, it back tested that megaphone pattern yesterday as a resistant. After breaking it down Thursday, back tested as a resistant and pushed down more. That's very bearish price action. Okay, so I got first resistant, which is the pivot low of this breakdown right here at 275.6s. QQQ needs to recapture that level to put 277.9ish back in play. That's the megaphone pattern, breakdown pattern. If it recaptured, get above 278, that it'll get back inside the megaphone pattern and will trigger more upside, 279ish, 281ish. Maybe go back and hit 284.34ish. Okay, but the bull case scenario starts with a recapture of 276 and a recapture of this megaphone pattern. If we can recapture that, we got a false breakdown setup on our hand. Okay, but as long as below this megaphone pattern, below 277.9ish, okay, and also below, if it could stay below 276, 273 is the next critical support level. The bear case continues. If 273 fails, put in 270.8, 269ish, and lower price targets in play. We could maybe even drop down to 268, 265, and 263ish. All right, Dow Jones, big critical level that it lost. There was a gap fill around 330.8. I guess we kind of we gapped below it and we touched it. I guess we kind of filled the gap. Okay, so 330.6 will be the first resistant. All right, with 332.7 and 333.6 as the next resistance, okay? Dow Jones need to recapture those levels. If it wants to put in a low, I'll favor a low is in when a critical resistance level gets recaptured, especially 338.68. All right, but as long as below 330.6, the next critical support level is at 327-ish and 325 to 324.6 zone. All right, below 324.6 is very bearish. All right, that's the loss of the 38.2 fib level. All right, Tesla is just looking very bearish. We got this bearish outside daily candle right here. So if Tesla wants to continue this downside, even though it's very oversold, you see it's been oversold since December 13th, and it's just done nothing but get more oversold. So if Tesla wants to continue that, the next critical support I got is 149.4. Needs to break down those levels to trigger more downside. All right, to be bullish, it needs to recapture 154. If it cannot recapture 154, I'm gonna stay bear bias on it. All right, a recapture of 154 will put 156, 159, 161 in play. Okay, 161.7 with 166s above. All right, below 149.4 should trigger more downside. We do have a big gap that has not been filled. The gap's around 137-ish, okay? Next support that I'll be watching is around 140.8-ish. All right, 144.5 and then 140.8-ish with the gap fill around 137.5-ish. All right, so keep an eye on those levels. The bear case or the continuation of the bear case, because it's very bearish already, starts or continues when 149.5 fails, okay? Bulls need to recapture 154. Apple, the big level that Apple lost was that 137.4 level. Finally lost it, but the first resistance will start at 136 and then 137.4 with 139 and 141.7 above. Bull case starts at 136 recapturing and especially 137.4. As long as below 136, the next critical support is at 133.5-ish. Okay, which kind of tested yesterday. Okay, so if that fails, bearish continuation is in play with 132.6 and possibly a test of 129 with 126 below that in play. Okay, now let's look at some inverses. VIX has been pretty useless as far as helping us to gauge the SPY, but yeah, it broke back below 22.7. As long as below 22.7, stay bearish. Once again, you know, recapturing 22.7 is usually bullish, but it's been doing that and not showing much follow through. So I need to see 23.5 and 25 recaptured before I can say I'm bullish on the VIX. Okay, but overall though, it's pretty much choppy and been useless. That's why I like to watch DXY combined with the VIX, and DXY did recapture 104.4. Okay, so DXY is giving us some bullish price action. Okay, so it wants to continue, it needs to hold 104.4 and go test that 105.3, 105.8, and 106.5-ish level. Break back below 104.3-ish though, DXY is going to start looking bearish again. All right, let's end this with the option flow filter for 500K. So here's my option, this cheddar flow here, picking the SPY filter for 500K premiums, 83% in the puts. All right, that's what we got here. One thing that sticks out to me though is that 2.7 million premium one here. Sweep orders over 6,000 in size. All right, 380 strike price. So we got some people that's bearish. It's not a big out the money one, but it is kind of out the money. Technically, it's out the money. All right, QQQ. And look at this one, sweep order 18,000 in size. This one is a 260 strike price. So, and it's 100% in the puts right now. So yeah, there's some big players that believe we're going to see more downside. This one right here, over 5,000 size, 600,000 in premium, 276 strike price. Okay, so you guys see it. Big money is still bearish on it. Dow Jones usually don't have nothing, but we got a sweep order right here, 375 strike price. Wow, that's very in the money. Okay, Tesla. And here's Tesla, 97% in the puts. Okay, we got a block order, 1.8 million premium, over 34,000 in size. 70 strike price. A 70 strike price. That's wow. Very bearish play right there though. Still getting a bunch of these in the money puts still coming in. So, I mean, it looked like hedges. But yeah, that one definitely sticks out. Over 34,000 in size. 70 strike price. Apple. Here we got Apple. This one right here. Yeah. Getting a lot of in the money. Yeah, in the money puts. But still, you know, they are puts. All right. And lots of money pouring in for these in the money puts. Nothing for DXY. And here's the VIX. VIX got a split order for puts, 24 strike price. All right. So that's what I have for you guys today. If you guys want more content from Uncle Charles, please consider joining my Discord and let's make this money together. Other than that, have a great weekend. God bless you all. Peace.